everyone, my name is Arjun and today I am going to be giving you a video demonstration of a tax calculator app that I have built for the financial year 2026-27. It's called Lekha. Lekha in Sanskrit means accounting or record keeping, and it is an app name for this particular web application which was built using React and Vue. Deciding between the old and new regimes in India is often a hassle, and especially for those who are in the higher income bracket with a lot of deductions, many a times it makes more sense to stick with the old regime compared to the new regime. So, Leica is a privacy first browser based tax calculator designed to bring clarity to your financial planning for FY 26-27. It uses an 8-step process, and as you enter your salary, rent, investments, etc., the engine works in the background and you notice a live preview as it calculates your tax liability in real time, giving you instant feedback without ever sending your data to a server. And once the computation is done, it presents your recommendations, whether it's the old regime or the new regime. It just does not give you a number only, it gives you a complete educational walkthrough. So, without further ado, let's proceed with an example. Let's assume that we have an individual whose take home salary after all deductions, excluding bonuses, is 60,000 a year. And let's assume that this person is under the age of 60. For folks who are between 60 and 79, and those above 80, there are some additional tax breaks that they get. We will not be getting into that, although this app is designed to calculate the individual income tax for people of all age groups. We will go with the general taxpayer in this particular example. And let's say that this person got a bonus of rupees 2 lakhs, and he pays a monthly rent of 25,000, and he also receives HRA of around 6,000, let's say. And as you can see, every section, all 8 sections have like commonly asked questions that people may have while trying to fill out this form. So, like for example, what are the metro cities? Metro cities, in as per the old Income Tax Act, were Mumbai, Delhi, Kolkata, and Chennai. Later, the original Income Tax Act of 1961 was amended, and the new act is currently in force since 2025, and it will be applicable for FY 26-27. So, these are the new cities which have also been added to the metro tier category. That is Bengaluru, Hyderabad, Pune, and Ahmedabad. And I'll be choosing metro. And I don't know my basic salary. It's usually 40 to 50% of your gross. So if the gross was uh, 60,000, let's say that it is 30,000. And this HRV, let's increase it to 3,000. Let's 70%. Yeah. And continue, and employee PF, that is fixed at 1800. This is fixed component. And let's say that this individual has exhausted his ATC limit and put all of it in PPF. So as you can see, it shows a message saying that the cap for the ATC deduction limit has been reached one phase. So it doesn't matter whether he's putting his funds in any of the other ATC investment options. He has already reached a cap of it. So I'll be leaving all of this blank. And remember, PF contribution deducted by the employer is not included here. It's only the employee contribution which is to be added over here. And let's proceed. Before I proceed, If you have a look at the tab right here on the right hand side, it gives a live preview of the calculations under the old tax regime and the new tax regime. So right now, the old tax regime seems to be having a tax outgo of around 25,800, and the new tax regime is not having any tax outgo whatsoever. So let's proceed. And let's say that this person pays the annual premium of 20,000 for his health insurance policy, and he also pays around 4,000 for his preventive health checkups. He or she doesn't pay the premium for the parents. And let's continue. The calculations are happening over here using, and I've gone to the next page. And let's say that since he's living in a rented accommodation, he doesn't pay home loan interest. This is applicable only if he's residing in his own property, which is not true in this case. And let's say that his NPS contribution under this section is 25,000, and employer contributes, say, around 1,600 every month to his NPS. And uh, there are no educational loans that he has to service, and let's say that he pays a professional tax and of 2,500 rupees, and savings account interest, let's say he gets around 32,000 annually, and let's say that he donates 1,000 rupees to a charitable organization. And these are certain additional fields which are applicable only to those who are disabled, and they offer some additional tax breaks. This application is built to handle that, but in this case, we will not be including any of these. So again, you see some of the commonly asked questions and the answers to those. All these responses, mind you, are factually correct, and they have been sourced from the income tax department's website. And I'm going to click continue. Before that, as you can see, the old regime still has tax outgo, and the new regime does not have a tax outgo. So the new regime is still winning this battle. So I proceed to the next page, and let's say that from fixed deposit, this person earns 1.2 lakh annually, and recurring deposits he earns 40,000 annually, and any other interest income that's earned is from his other investments like chit funds, etc. Let's put this at 80,000. So total other income comes to 2.4 lakhs. So I just increase this to 3 lakhs. Total other income now comes up to 3 lakhs. Yeah. And let me see the results now. As you can see, the old regime still wins the battle. Sorry, the new regime wins the battle because of having a net zero taxable amount, whereas the old regime makes you poorer by around 75,000. Wah, wah. Now, this gives you a precise snap. Like, I have included this particular feature called Explain Like I Am 21. So, what it does is tax jargon can be intimidating, the many sections, the legal sections, and so on and so forth. All of this is translated into plain, actionable English, making tax planning accessible to everyone. So you just turn this tab on, click share result, the summary is copied. Now you open, I'm going to open my library writer, and I'll just show you, and I'm just going to paste this result. And as you can see, it gives you a neat snapshot of what you save if you choose the new regime for this particular individual. And let's get back to this page. And in addition to that, I have added a few cool stuff here. So if you ever thought, what could my savings actually translate to in terms of tangible value? So this is exactly how your tax savings equate to in monthly ODD subscriptions. I've taken Netflix base price as of today, and well as the number of cups of coffee that you can have in a gourmet coffee outlet, and the number of movies that you can watch in a cineplex if you purchase one movie ticket a time. I've taken the standard fare that has been fixed by the Karnataka government recently as the benchmark. Obviously, you may or may not get 252 tickets, but this is a good yardstick to compare it against. And it shows that you do not have any more like headroom left to claim deductions under the old regime. You utilized 100% of it. Here, it gives you a brief explanation in simple language that anyone can understand, and the suggestions, if any, are provided over here. So you have exhausted your ATC limit, and it says that you have exhausted your ATC limit, which is 1.5L, and medical insurance premium for parents can provide an extra savings provided this person is sticking to the old regime. And this is the slab by slab tax breakdown, which has been fixed by the government, and it is applicable for the financial year 26-27. And you have the detailed comparison here. And I also have included a what if scenarios simulation playground. It lets you simulate hypothetical scenarios. What if you increase your contribution to the NPS, and if your salary were to increase, would the new regime still trump over the old regime or not? You can play around with this and find out. So let's get started with this. In terms of ATC, it doesn't matter even if we were to increase the investment to another 1.5 lakh, because he's already exhausted his or this person has exhausted their ATC limit of 1.5 lakhs. Again, I'm sorry for using he always, like it's I want to keep it gender neutral, so I'm sorry for that. Yeah, and let's say that the extra NPS contribution for this person is 25,000. As you can see, the savings that he or she stands to make by making this extra investment, provided they stick to the old regime, plateaus at 25,000. Anything beyond that, as you can see, the taxable outflow remains the same. So let's put it at 25,000. And let's say that the salary of this particular individual increases by 50%. In this case, also the new regime trumps. So let's say that is take home salary or the gross salary increases by 50% over his current salary levels. The tax outflow in the new regime is bumped up to 1.13 lakhs, whereas the under the old regime he'll be paying close to 1.6 lakhs. So even in this case, the new regime is the clear winner. And you have a complete breakdown of the deductions as well as the calculations that go into this particular individual's taxable outflow computation. And that's it for today, guys. Before that, this is a very important disclaimer. This is only for an indicative purpose. And sorry, this is an indicative tax comparison, and it's for educational purpose, and it is for quickly understanding how much your tax outflow will be. It is not giving you any sort of tax advice, which can only come from a qualified person, a qualified chartered accountant, or an auditor. So kindly consult them for your actual filing. And as always, your data will never leave this browser. That's it for today, guys. Plan your finances well in advance and have a good and secure financial life ahead of you. That's it for today, guys. Adios, amigos. I'll see you next time.